Good morning, everybody. Hope everybody is doing well. So, we are going to talk about the current very high inflationary environment in the US economy. I made a video last month when the inflation rates, the CPI, Consumer uh, uh, Producer Index, went up to 8.6%. Since that time, we have another reports that has been coming up, uh, indicating the inflation for the month of July, it's even higher. So this is the, say for example, the new US news report saying the inflation roaring in June, hitting 40 years high at 9.1%. It's well above forecast. This is the report as of July 13th, 2022. So the inflation is very high. It's at 9.1%, hitting 40 years high. So during this last 40 years, the inflation was never so high. So all the things like food, energy, housing, everything has been going up. So we are going to analyze a little bit more where exactly this inflation is rooting into our economy. So let's go to this website, the US Bureau of Labor Statistics. They're the one basically calculate this consumer price index. So if you can go to this subject here, you can select consumer price index, showing basically since June, this index is 1.3%, and this for the consumer price index for the urban consumers rose up 1.3% for this month, seasonally adjusted, and rose 9.1% for the whole of last 12 months, last 1 year, not seasonally adjusted. So if you look into this graph here, so you can click on it and you can see these different areas, how much this basically, the contributing towards the CPI. Say for example, the energy, if we click on the energy, the commodity price has gone up 60% since the last month. Energy services going up about 19.4%. Natural gas going up 38.4%. Electricity going up 13%. Food at home 12%. Away from home is 7.7%. Meals, snacks, it's going up about 8.9%. Let's get into the details about energy. We talked about it. All items, less food and energy, that's more important also. So commodity, less food and energy is 7%, less energy is 5%. So in their apparel going up 5%. New vehicles are going up about 11.4%. So if you got a car, it's going up 11%. Used cars 7%. Medicare going up 3.2%. Alcoholic beverage 4%. Tobacco, smoking products 7.9%. So this is basically showing that inflation is really very high. This is on the consumer side of the inflation. If you want to look at the producer, the PPI number that is also announced last week, a few days ago, that's even higher. This number is 11% year to year. From June of 2021, the PPI numbers are going up 11.3%. And for the month to month, it's 1.1%. And you can basically see the goods, the energy going up 10%. Less than energy is 5%. Food is going up 0.1%. So most of the PPI, it is going up basically the residential electric power 3%, natural gas 6%, gasoline is going up 18.5% from the producer, whosoever is producing the gasoline, that is passing on to the consumers. Basically, this is very high. Jet fuel seems to be coming down a little bit because maybe the demand is not there as much. Home heating is going down as 1.7%. Diesel fuel is very high. So the truckers basically driving, their prices are going to go up like, 13, 14%, becoming very expensive. And I have heard some truckers basically like, almost in a condition that they will not be able to drive like the trucks if the prices go up any higher. So it's a pretty, dire kind of like a situation. So very high inflation rates. So hopefully you got an indication basically how the U.S. Bureau of Labor Statistics basically their numbers basically like how it is impacting our life in terms of how things have become expensive. So I also made a thumbnail that if you like 9% CPI, you can basically see if you had like $100 today, the worth of that $100 will be about $90, or if you had $1 today, it will be up to like 90 cents. The value of the dollar is going to go down with this very high inflation. So people are basically like suffering on both sides because you have to spend too much money, you're not making as much money, and basically like the dollar is getting like weaker. Hope you like this. So we are going to analyze a little bit more about basically with this inflation where our economy is going to go. Are you going to have a recession, or are you going to have like a stagflation? So please stay tuned. Thank you. And if you like this video, please subscribe. There is this button to subscribe. I would appreciate that. So given this very high inflationary environment, where are you going to go next? Are you going to have a recession, or are you going to have a stagflation? So we are going to analyze a bit more. Which way are we going? Last month, JP Morgan CEO, Mr. Jamie Dimon, he's one of the most respected banker in this country, mentioned that in US, the bank itself, they're basically bracing for an economic hurricane. It's going to be very volatile, and it's going to be very, very difficult to maneuver. So it's going to be an economic hurricane looming in the horizon. The Fed actions, the European war, basically, especially the war in Ukraine, has created unprecedented challenge for the bank. And it's too soon to say how intense the storm is going to be, according to the CEO. And recently, Jamie Dimon's after the earning, the stock has fallen to almost like $100 from $102 from all-time high at $165. So almost fallen like over 30%. So even a bank like JP Morgan are not going suffering basically from the credit loss, etc. So let's look at the yield curve. The US yield curve usually basically it's upward sloping, but here in this particular situation, I have highlighted in this like red colors, the 2-year rates, it's around 3%, over 3%, and the 10-year yield has fallen over 3%, slightly below 3%, meaning the curve is like, yield curve is inverting, meaning the 10-year yield is lower than the 2-year yield, which is opposite to how it should be under regular economic circumstances. So inverted yield curve basically is an harbinger of recession. During last 7 recessions, if you analyze, it is pretty much can be predicted that if there is a yield curve inverting, the recession follows. So we can take that as a good basically like correlation if the relation can happen, the recession can happen and not going to happen. In this current environment, the US Federal Reserve is raising rates. In the month of May, they increased the rate by 25 basis points. In June, followed by 75 basis points in June, and it is expected to raise by a whole 1%, the FOMC in this July meeting, according to many of the strategists in the big banks like Citibank, Nomura, and Wells Fargo. And you can see basically this yield curve, basically it's the Fed fund rates are going up. It's from almost like very little 0.2 to going up to 1.8%, and after going 1%, it's going to be even higher. And target rates, I believe, There is no Fed meeting between July and September. They will raise some more rates, so the short-term rates are going to be over 3% by the end of the year. During last few weeks or days, basically the commodity prices are really like tanking. Especially the copper prices have dropped 30%, basically meaning the for the high inflation and the recession is going to be happening because the slowdown is going to happen. The oil price is too high, go up to $120. Now it has fallen to $99 during last 1 week, meaning the economic activity in the future market is like slowing down, especially wheat, oil, Brent oil futures prices dropped almost like 20% in the last few days, indicating a potential slowdown in the economy. At the same time, the US dollar is very strong. All the other banks are raising rates. Major industries, especially ECB, Bank of England, German Central Bank, they all have raised interest rate by 1% or half a percent. The inflation is very high in other industries as well. And the US dollar, basically, if you take the comparison to euro, so euro is to be a lot stronger, but as the US dollar has become so strong, it's almost like in parity with the euro. So if you are getting basically like almost $1 to €1, which was very unlikely, meaning US dollar is very strong. So all the US companies basically exporting it is going to be very much export oriented economy where the companies are going to be exporting they will not be able to buy too many things because the dollar is very strong. So the US bank, the companies, the balance sheet might get impacted in terms of their profits because of the high dollar. I think Microsoft has already indicated that it's going to have their some kind of impact because of the dollar is getting stronger. So in this situation, is the recession is looming. So what is recession? Recession is basically like GDP basically slowing down GDP in 2 quarters. As you can see, the consumer sentiments are fine so far, but the interest rates are going up. So short-term interest and the 10-year interest rates almost reached like 3%. So the mortgage rates are basically back to the 10-year yield. So mortgage financing is slowing down, indicating the housing market, which is one of the highest, basically biggest component of the US economy. Economy is slowing down as the consumer spending on disposable amounts also reducing, basically because whatever consumers saved during the pandemic, I think as the interest rates are going up, their appetite to buy disposable amounts like say buying a washing machine or a TV, they are basically like appetite is going down. Labor market is holding up fine so far, but there has been layoffs starting to happen. And if the interest rates keeps going up and the companies are not like making enough profits, there could be more layoffs leading towards like a recessionary situation soon. How about stagflation? So now we are in a very high inflation period, as you have seen, and the growth is slowing down. So that situation is called as stagflation. Stagflation meaning high inflation or no growth. And whenever the stagflation happens, the equity prices very rapidly falls. As you can see, U.S. market like the Dow Jones, S&P 500, or the Nasdaq already are in bear markets. I think Nasdaq like well below 20%. S&P also fell below 20% and bounced back. Dow is down. So and with this stagflation, especially like it can get even worse. But the silver lining is that with these commodity prices are dropping, meaning maybe the inflation is like peaking at this point. So if the U.S. Federal Reserve can manage, they can have like a soft landing on this economy, and we may not have into like a severe recession or maybe like a short-term recession. So maybe in a short term, the financial market, it might bounce back a little bit. and depending on how it works out, if you're in a stagflation situation or if a very deep recession, market will adjust accordingly. So hopefully you enjoyed this video, and if you liked it, please click the subscribe button so that I can create more of these like videos. I appreciate. Thank you. God bless. Stay well.